It was a rough day for the broader markets, although we did close off the lows there, but the small caps underperformed. Russell 2000 off about 3.5% on the day. Joining us now is Nancy Prial, Essex Investment Management co-CEO and senior portfolio manager. So Nancy, we were just having a conversation there with our colleague about this. Investors, they do seem to have new concerns about this economy, Nancy. I think a lot of people thought we were for sure just cooling here, but now maybe some concerns that actually maybe we're actually tipping into a downturn. How do you see it, Nancy?
Well, again, as your previous guest just said, the market does an excellent job of predicting recessions that don't occur. I believe the statistic is that the market has successfully predicted 13 of the last 7 recessions. That's about a 50% hit rate. We do see the economy slowing, and certainly there are a lot of indicators that show that it's slowing. But we don't say, one, we are clearly not in a recession today, and we really don't see the framework for a deep recession coming. We think it's likely that growth will go down to something below 1%, but we also think it's likely that we're going to see more rolling recessions like we've seen over the last couple of years. We're seeing some weakness in tech, but we're actually seeing some strength in industrials and some strength in healthcare that we hadn't seen before. We want the market to take a breath here, catch it, take a pause, catch its breath, and reevaluate based on the pretty good earnings that we've had coming out of particularly those industrial and healthcare sectors.
And Nancy, I know that you look at small caps in particular, and there has been a little bit of a rotation in small caps recently, but of course they fell more today than the broader market. So if things are slowing but not entering recession, and if the Fed is going to be cutting in September, what does that imply for small caps?
Well, that implies a very good stretch for small caps. A slowing but still positive economy is good for small caps. Lower interest rates are very good for small caps, particularly for those companies that do have floating rate debt that need to refinance their debt. Inflation coming down is very good news for small caps, and we're seeing all of those factors at work. In addition, some of the weakness that we're seeing in the large cap, particularly in the Mag 7 stocks, gives room for investors to look at the great growth stories that are emerging in the small cap space that they didn't need to look at before because they could get all the growth they wanted in those largest mega cap stocks.
Nancy, what does earnings growth look like for small caps? What are the forecasts?
So the forecasts are that earnings growth in small caps is accelerating. We've seen that so far. Now, we're pretty early in the reporting cycle. Small caps lag large caps by a couple of weeks, but we're starting to see that come through. And by year end, by the fourth quarter, we're expecting that the growth rate in small caps will be greater than that we've been seeing in large caps. And that is a necessary component to really have this small cap rally have legs, to see that growth rate not only accelerate, be positive, but also be greater than large caps.
Where within small caps would you be looking here? Because as some sort of skeptics of the small cap rally have noted, about a third of the companies in the Russell 2000 aren't profitable. So do you stay away from those in this environment?
Well, we think you need to differentiate between companies that might be cyclically unprofitable and those that are structurally unprofitable. So the cyclically unprofitable companies could be either growth cyclicals or industrial cyclicals that are coming out of a challenging environment, but where their business is improving and they're back on a path to improved profitability and better balance sheets. In addition, there are healthcare companies that are just not big enough yet to earn enough to cover their R&D and SG&A expenses, but as they can grow, they also will break into profitability. So we think you can look at those kinds of companies. We think you can look at those growth cyclicals. Again, we think there are a lot of opportunities in the lesser known areas of technology. What we would avoid in this environment are the concept stocks, those that have no revenue and are losing a lot of money, that are hyping a new technology where they haven't shipped those products yet.
Nancy, thanks a lot. Have a great weekend.
Thank you.